Hi there, Bryce Holdaway here, co-host of Location Australia and Director of Empower Wealth. Now this is the second video series in our 4-part series teaching you how to build a property investment portfolio. And in the first video, we talked about the property investment formula, which was asset selection, borrowing power, cash flow management and defence. And the important part about that particular formula is on its own, it's quite easy to follow the steps, quite straightforward. It's a bit like an award-winning chef passing me their recipe and saying, just follow the recipe and you have no problems. But of course it's a little bit laughable because the chef has had lots of experience, there's lots of intuition involved as well. So not only do you need the formula, but you also need the experience that comes around. And that's a bit like that property investment formula. Not only do you need to know how to get the best out of asset selection, how to do the best borrowing, how to get the cash flow management to talk, and also to put some defence in place, but you need to be able to bring it all together and have some experience to be able to do that. So that's something to keep in mind on that first video that we went through, that you need to have some form of experience and some knowledge that you can surround the formula. I think it's important to understand that investing is not an event. It's not just a case of buying a property and that's it. It's so much more than just bricks and mortar. So in our view, there's actually 5 crucial steps that you need to follow so that you're able to successfully not only invest in property, but also build a property portfolio. No matter if you're a first-time investor or whether you're a seasoned pro, following these 5 steps in order are crucial to success. Now what I want to encourage you to do is stick around to the end of this video, because I'm going to show you how to get your hands on a copy of an article that I wrote showing you how to create a $2,500 passive income in retirement debt-free. I'm going to show you how to get your hands on that because it shows 3 different scenarios, 3 different case studies where we've built portfolios on behalf of clients using the 5 steps that I'm talking about today and showing exactly how many properties and what type of properties they need to be able to achieve that $2,500 a week. So stick around to the end of the video and we'll show you how to get your hands on that. So what are the 5 steps? Well, the first step is actually to clarify. And as I mentioned in the first video, one of my pet hates is the one-size-fits-all approach to property investment. I think that it's very difficult for one particular property to be suitable for every particular investor, because for you might be chasing capital growth, whereas the next person might be chasing income. You might have more time to retirement, the next person may have less time to retirement. You may be more aggressive when it comes to debt, the other person might be a bit more conservative. So it's really important to understand you and your particular circumstances. So the first thing that I suggest you need to do is to clarify your position. Take a snapshot in time of what your circumstances actually look like. What do your assets, liabilities look like? What does your income and expenses look like? And what sort of investor, investor profile do you actually have? Because once we know those sorts of things, we can then move into the second step, which is to evaluate. And that's a bit like a doctor who would get some results or clarify exactly what's going on for you, and they'd have a look. And using their experience and their wisdom and their years of being in the field, they'd actually evaluate what you actually need to do so that you can actually move forward. So it's no different when it comes to property investment. It's evaluating what your particular circumstances look like, understanding your risk profile and understanding how long you've got until you retire, and of course what sort of income goals you have. Evaluating what exactly should you be considering when it comes to building a property investment portfolio. So the first step is to clarify, find out everything we can about you, understand your short, medium and long-term goals. The second step is to evaluate, where we actually have a think about what it is, what opportunities actually do exist for you. Now the third step is a plan. And I know that can just be an easy throwaway line, but it's really important that we model and we understand what it takes for you to achieve your goal, and then reverse engineer that back to the present so that we know exactly what you should do. Because in my experience, a lot of the mystery that comes from property investment is a bit of the fear of the unknown. But if we can take that fear away and actually have a plan in place that says you need to buy an investment property this year for this amount of money, this typical growth rate and this yield, and then in 2 years' time you need to buy another one, and then in 2 years' time after that you need to buy another one. What that does is it takes away some of that fear, and it takes away some of that mystery, and it just gives you a blueprint that you can follow, so you know exactly what you need to do. So clarify, evaluate, plan. The fourth step is implementation. And let's be honest, that's generally where most people start, because it's pretty easy to get on the real estate portals and have a look at real estate and start looking at the bricks and mortar. But as I mentioned, investing in property is so much more than just an event. It's a process. There's so much that we need to do prior to getting to that bricks and mortar stage. So implementation is finding the right asset that you're looking for, because not every property makes for a great investment, and then having the ability to go and deliver on finding that asset using tactics and negotiating and all those sorts of things that come with securing the investment property. So implementation is really important. If you remember back to our property investment formula, we talked about asset selection. So knowing which property of the 9.4 million dwellings that are in this country that you should consider buying is a really important skill to have. But once you've actually got the plan in place, being able to deliver and implement the property that you're searching for is really, really crucial. And then the fifth step, and I think one that's probably grossly misunderstood, or not misunderstood, but just glossed over, is manage. What gets managed gets done. And I think the best way to illustrate this is through the use of a story. And I remember meeting a girl, she worked for one of the major airlines in this country, and her job was to fly from Sydney to London via Hong Kong every second weekend. And when I met her back in 2010, she said that she bought her first investment property in 2002, and her plan was to buy one each and every year from that point forward. She bought one in Sydney's northern beaches. It was an apartment. She'd almost paid the debt off by the time that I met her. So through simple maths, you'd think, well, first investment property in 2002, I met her in 2010, that's about 8 years. She'd probably have somewhere between 6 to 8 properties under that plan. And so I asked the question, how many do you actually have now? And of course, you're probably getting the picture. She had one investment property. She still had that one investment property, even though the plan was to buy one investment property each and every year from the moment that she'd actually started. So the important point here was, I asked the question, why haven't you bought any more? And she said, well, I just haven't got around to buying them. I'm flying internationally every second week, and life just gets in the way. So I guess that's an important illustration of what happens to a lot of property investors, in that they have the desire and the capacity, and in a lot of cases they get to actually buy an investment property. But then the implementation of the plan is the managing of the plan is probably the challenging part. So importantly, each and every one of those 5 steps needs to be done, and it needs to be done in that particular order. So if we recap, the first thing is to clarify. The second point is to evaluate. The third step is to actually build a plan that you can follow. The fourth step is to implement the plan that you've built. And the fifth step is to check in regularly on the plan to make sure that you're on track. And I guess the challenge, even though there's a great opportunity in this country of buying an investment property and setting up your financial future from doing that, I think the challenge is that it's a highly emotional and opinionated asset class. And the fact that it's one of the basic needs that we have as humans, which is shelter, doesn't necessarily mean that every property makes for a great investment. And I think probably finding an investment grade asset and finding an investment grade property is probably a little bit harder than most people think. And it's interesting, I shared the stats in the first video that 73% of all property investors actually stop at one investment property. And I think that that's largely around, in my view, 2 things. One is probably a big fear of debt, which is understandable. And incidentally, there's 3 types of debt: horrible, tolerable, and productive debt. Horrible being the stuff where you buy, on credit cards, televisions, assets that go down in value. Tolerable is the debt you have on your principal place of residence. You're the only one paying it off, and it's slightly tolerable, but at least you're buying an asset that's likely to go up in value. And the third type of debt is productive debt, and that's what you should get as much as you can, hands on as much of that as you can, because that's where you're using debt to buy income producing assets. So there is an opportunity to build a property investment portfolio in this country with residential real estate by following 5 steps. But I acknowledge that it's not easy, but I think if you understand that the first fear of the fear of debt, if we overcome that, the second issue I think is the fact that there's no, I guess, process to follow. So hopefully that's what this video serves for you. It gives you that, it's a proven 5-step process where you can follow to help you build a multi-million-dollar property portfolio that helps you achieve a passive income. Now, I mentioned to you I'd show you how to get a copy of this article that I'd written that shows you 3 case studies on how 3 different people built a portfolio using the 5 steps and building a plan. If you want to see what that plan actually looks like, leave your details in the spot below this video, and we'll actually physically send you a copy of this particular magazine so you can read it at your leisure. Or if you want to get access to it quicker, click the link below. There's also a PDF copy that you can download and easily get and read straight away. So hopefully this video served you. The first video helped you understand what the property investment formula was, A, B, C, D. This particular video is helping you understand what the process is, the 5 steps that you need to follow so that you can build a passive income for life. Now in the next video, what I'm actually going to show you is how the industry works. Because it's okay to understand what the formula is, it's okay to understand what the process is, but at the end of the day, you have to work with people within the industry and kind of understand how it all works. So I'm pretty excited to share with you how the industry actually works, how people get paid, and give you a bit of an edge when you're looking to buy your next property. So thanks for checking out this second video in this series of 4, and I look forward to seeing you on the next video.